Google stock is broken, uninvestable trash. I'm just kidding. Welcome back to Strongman Personal Finance. Remember not too long ago, everybody was freaking out about Google stock. They said it's over, it's dipping, they screwed up a couple of AI presentations, and this company is basically going extinct. Well, shockingly enough, they just reported their quarter two, 2024 earnings, and they posted fantastic results. As a matter of fact, this company is still growing at a rapid clip because it has global reach. This is not just a US stock pro, it's a global company. So let's go ahead and check out Google's earnings, this dead company. That is roughly 2% of my portfolio, and I actually bought more today. I bought maybe like $50 worth. So let's go ahead and check out the earnings because they're so exciting. Alphabet, which is the parent company, today announced financial results for the quarter ended June 30th, 2024. Our strong performance this quarter highlights ongoing strength in search and momentum in cloud. And I just want to pause there. I hate Google's cloud services. I think they are garbage. I'm a Dropbox man, okay? I've tried to use Google's cloud. It's an abomination, but that's neither here nor there. We're innovating at every layer of the AI stack. You actually kind of screwed up a couple presentations, but okay. Our long-standing infrastructure leadership and in-house research team position us well as technology evolves, and we pursue many opportunities ahead. So if we look at the financial results, changes in revenues year over year, 14% increase in revenue. Remember, this is a $2.26 trillion company. This is the third or fourth largest company by market cap in the world, in the entire planet. And it's still growing at 14%. Will that continue? I have no idea. But those are pretty incredible results for a company within the top 10 of the total market. This is 2% of my portfolio. That says a lot when you have a global portfolio. They did some adjustments for currency, because remember, it's a global company. So when they earn profits in other currencies, they have to translate them back into US dollars. And the exchange rates affect the US dollar amount that they earn based on the strength of the US dollar. The US dollar has been vertical lining basically over the last, couple of years. Everybody wants treasuries in, America. So a lot of currencies around the globe have not done so well. They've weakened against the dollar, and that definitely affects Google's currency, their revenues, when you adjust for currency. Operating income, this is a big one. So not only did they grow revenues 14%, they massively exploded their operating margin and their operating income. They grew their operating income. Let me give you the exact numbers here. 24 divided by 21,838. They grew their operating income 25.6% year over year. Their operating margin, this is their profit margin before interest and taxes, basically, 32%. This is an insanely profitable business. I mean, think about it. It's like ads, basically. Ads, YouTube, whatever. Very, very profitable. Very, very, very freaking good, okay? Look at their net income. Basically doubled, more than doubled, or almost doubled. That's crazy. Other income, excuse me. Their net income is up pretty decent amount as well, and their diluted earnings per share is up. So basically, is this surprising? I mean, it's freaking Google, okay? It's in the top 10 of the world. I think it's top 5. This is a company, you put it in your index or you buy it individually, and you just own it forever. That's it. I mean, this company has insane moats. Like, what company can challenge Google for Google Search, Google Maps, basically everything? This company has so many monopolies. It's out of control. They should be broken up. So let's look at the individual segments here. So Google Search and others. So let's see how much Google Search and other has grown year over year. 48.5 divided by 42.6. 13.8% year over year. That's pretty good growth. YouTube, which is a monopoly. Who challenges YouTube? Really? 13% year over year. Insane growth. Google Network, it's actually had some decrease there. Let's see, what is it? Roughly 5% drop, 5.2% drop. So everything's going strong except Google Network. But overall, their advertising revenues have grown pretty significantly, okay? Google subscriptions, platforms, and devices also up. Let's see how much. 329321 divided by 8142. That's up 14%. So roughly everything's growing at like 13, 14, 15%. Google Cloud, that I don't like using, just to be honest, is up 28.8%. I mean, what is there to criticize? Okay, I mean, everything's going well. And of course, they were partially able to increase their profits by firing employees, of course. Now, what are the profitable segments? Well, obviously, the Google services, the main ones. You know, you think about YouTube, search, et cetera, et cetera. That's the vast majority of the profits. Google Cloud is starting to get up there. It's profitable now, and their profits from Google Cloud have more than tripled, basically. There are other bets. This is like other investments that they're making. They're losing money on that. And Alphabet level activities is probably like intercompany revenue potentially, or just like expenses for the overhead. Overall, I mean, there's really nothing to laugh at. Like the company's spending money investing in other projects that could potentially pay off in the future. Okay, they're paying a dividend now. We know they're paying a dividend. Okay, amazing. Share price drops probably out of the dividend, so nothing crazy there. If we look at the balance sheet, I mean, we see that, you know, there's some increase in property, plant, and equipment. They definitely made more investments in that. That's going to increase depreciation expense, but that's not going to materially affect the profits, obviously, as we've seen. I don't see any major red flags on the balance sheet. This is Google. I don't think it's going bankrupt anytime soon. No crazy amounts of long-term debt compared to long-term assets. I don't see anything wrong with the balance sheet. Let's go down to the revenues. Okay, so we've already talked about profit and loss. The main thing you want to focus on is they're growing their R&D expenses, which I think is fine, but they've saved money by cutting down on sales and marketing. It's basically flat, and they cut some general and admin. That's helped boost their profits pretty significantly. Their income from operations is up over $6 billion, it looks like, year over year. That's pretty good. Okay. Just fire some people, bruh. You can see that they're doing some share buybacks. You can see the share counts have gone down. I mean, you know, it's almost like yawn-inducing. It's like, okay, yeah, Google did good. Wow. Yeah, man, nobody expected that. They're growing the revenues and they're highly profitable. What a shocker. Statement of cash flows. We see depreciation expenses gone up because they've increased property, plant, and equipment. Stock-based compensation is roughly flat. Deferred income taxes, looks like they recorded some kind of gain for deferred income taxes, so they subtracted that out on the statement of cash flows. Looks like they had a loss on debt and equity securities. I'm not sure what they're doing there, of $1 billion, but not material. Well, I mean, it's kind of material, but maybe they're retiring. Either they're retiring debt or they're invested in debt and equity securities, but they recorded some losses there. Let's see. Other. Okay, I don't know what other is. A big swing is income taxes net, so that's just a timing difference from when they were paid. Overall cash flows, no really major red flags there. We can see operating cash flow dropped year over year, but the big swing is from income taxes, basically. Wow, okay. So, let's see. Yeah, they've doubled their purchases of property, plant, and equipment. I wonder if that's for AI. Purchases, NVIDIA. I wonder if this is all going to NVIDIA, or at least the difference is going to NVIDIA. $6.8 billion. They went from $6.8 billion of purchases of property, plant, and equipment to $13.1 billion. Marketable securities, nothing. You don't have to worry about that. It's just them parking cash in treasuries or whatever. No major acquisitions that I can see. Blah, 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 blah. Net payments related to stock-based award activities. That's up a little bit, but hey, people got to get paid. They're repurchasing stock. That's the cost of stock-based compensation. Dividend payments. Oh my God, they're paying a dividend. Wow. But still, the vast majority of their cash is being spent on repurchases instead of dividends, which I don't really got a problem with, to be honest. But they paid $2.4 billion in dividends. Proceeds from the issuance of debt. Okay, they issued a little bit of debt. Probably they got cheap financing. And repayments of debt. So overall, you know, like, nothing really to hate on here. Still pretty impressive growth for this company. I mean, we've already talked about the segments. We know that Google services are still the lion's share of the profits, but Google Cloud is starting to really contribute to profits, and I guess people expect that to continue into the future. Let's see. Big part of the revenue growth is United States. Revenue would have been better overseas had the U.S. dollar not been so strong, because remember, the revenue has to be converted to U.S. dollars. So if you compared revenue with constant currency revenues, revenue growth is a lot stronger overseas. But because you have to convert it from dollar into dollars, if the other currency is weak, you convert it into fewer dollars, and that results in less revenue from overseas. But overall, I mean, like if you look at the core growth in the currencies, the growth of the revenue, they're doing fine. Okay, there's no major red flags. Revenue's growing fast everywhere at a pretty decent clip. Currency, bro. All right, well, that's Google's earnings. Very impressive. I'm very shocked that Google did well, and they're very profitable and they grew their revenues. Man, I hate having this company at 2% of my portfolio. Also, don't forget, if you want a sponsored video from me, where I make a video about whatever topic you want, I will not make stock price predictions. Send me $50. See the pinned comment below. Also consider buying my book, Stop Being a Broke Loser. It's on Amazon. Stop Being a Broke Loser. You will magically stop being a broke loser once you buy my book and read it and digest the contents. Finally, if you want a one-on-one consultation with me, where you can FaceTime me, Skype me, whatever, call me on the phone, $75 per hour. See the pinned comment below. I am a certified public accountant. I will gladly do your taxes next year or your bookkeeping, and you have a wonderful day.